index funds are not managed passively. We've written a lot on IFA.com about how there's huge numbers showing that people are jumping into ETFs and the numbers of invested in ETFs is going way up. And we have Wes Crill with us today from DFA. Isn't it kind of a misnomer? I mean, because a lot of people use ETFs more actively than passively, correct?
Yeah, I think it's one of the connotations where you think about the story that has largely been good for investors, which is this transition from traditional active to traditional passive for many people out there, and the benefits that might come along with that. Maybe lower costs, lower turnover, more reliable results. But the potential downside in the minds of many investors is that as you get a larger and larger portion of the mutual fund and the ETF industry being in these so-called passive or index strategies, then does that make the market less effective at pricing securities? The intuition behind passive investing is that people are going along for the ride with a segment of the market and not looking for any mispriced securities out there, not trying to find information that's not in market prices and make markets less effective. This is where you get into the contrast between the label for a fund, which in the case of an index fund, it might be considered by some market participants as passive, but then the usage of that fund. And there are many examples where index funds are potentially being used in ways that are not truly passive. One way you can illustrate that is to look at the top 10 highest trade volume securities thus far in 2023. And among those top 10 securities are 3 ETFs. So, for example, the S&P 500 ETF has the highest trade volume of any U.S. listed security this year. Almost 7% of the daily trade volume on average of the U.S. market is that S&P 500 ETF. And you have to think that many of the investors who are trading in and out of this security at that frequency are not doing so to set up long-term buy and hold positions. It is very likely that they are trading based on their expectations of the future, their sentiment about the market. If they're bullish, maybe they add to their S&P 500 position. If they're bearish, they could subtract from that. But I think that's a good example of how the label on paper of something might not be indicative of how it's being used, and it doesn't have the same implications for the overall health of the market.
Yeah, and I think that's pretty indicative of what's happened over the longer term. Usually ETFs now, and the most heavily traded ones and the most popular with the most assets get all the headlines. They're also usually, right in there in the top 20, 25, top 10 on an annual basis.
Yeah, that's what we see. Like I mentioned, there's a handful of ETFs that are right there in the top 10 most heavily traded securities. And, that's a good demonstration of how any consternation investors might have about, at this point, more than 50% of the mutual fund in the ETF space in equities is in index funds. But again, not a bad thing when we think about the mechanics of markets, because there's still ways that these quote unquote passive investments can be used to reflect investor expectations in markets and keep markets well functioning.
Yeah, and Dimensional is now one of the biggest providers of ETFs. So I assume, you folks are watching that, and you're not trying to promote ETFs as trading vehicles, correct?
Well, we think the reason why we look at this kind of stuff is to answer questions, right? So if people have concerns about a key tenet of Dimensional's investment philosophy, which is we want to use market prices wherever possible in our strategies, doing so means you have a reliance on market prices and the usefulness and the informational content of those market prices. So these are important things to look at. You're always assessing the dynamics of markets. Are people trading differently? Are trade costs changing through time? Is the constituency of fund investors changing? And, by and large, the signals that we look at suggest that markets are just as difficult to outguess as they have ever been. And that's due in large part to all of these different avenues for information getting into market prices.
I would think that the typical investor in a Dimensional Fund Advisors ETF would be a little more educated, should I say, than the typical trader. Do you see the volumes fluctuating that much, or does it appear, are there positive signs with your introduction to ETFs into the marketplace that people are using them more logically?
Yeah, I think in many cases, our clients who are invested in ETFs are the same clients who are invested in our mutual funds. Just because many of us, in our everyday lives have mutual funds and ETFs. We might have, mutual funds in our retirement accounts. We might have ETFs in our taxable accounts. Others might have separately managed accounts. So we want to have our investment proposition be applicable in all of these different wrappers. It's the same underlying investment approach, whether it's a mutual fund or an ETF. So we think many of our clients are using them similarly, which is to try and provide for their long-term investment goals. And we see that our mutual funds have had a very high survivorship rate historically. We expect it likely be the same thing with ETFs. Who knows? The future will tell us. But we think that's a tribute to us building these long-term investment vehicles that our clients can use to help meet specific needs and objectives.
Yeah, and just real quickly, let's go over some of the advantages of ETFs versus mutual funds. I know at IFA.com, we tend to use ETFs more in taxable accounts because they do have some tax advantages over mutual funds in certain situations, correct?
Yeah, there are some nuances to the way that turnover occurs for ETFs compared to mutual funds. There's a system called a like-kind exchange where the turnover can happen. Basically, shares of the ETF are exchanged for shares of securities that would go into the portfolio. And when you do your turnover in that way, you can defer capital gains in a way that with a mutual fund, there's always the possibility that you could have capital gains distributed to the shareholders because of turnover that happens when investors either redeem shares or subscribe to new shares. So it does offer the potential for ETF shareholders to defer their capital gains. Not a tax dodge. The government is always still going to demand taxes from you eventually, but it is a way to defer those capital gains until a time of your choosing.
Okay. Well, for people out there who are interested in ETFs in their portfolios, we really encourage them to talk to an IFA wealth advisor. That's kind of what we like to talk to people about. But thank you very much for your time, Wes.
Yeah, thanks for having me.